5.98. That was the average 30-year fixed mortgage rate as of February 26, 2026, from Freddie Mac. Under 6% for the first time since 2022. People see that number and exhale. Then they open a listing app and the exhale dies. Redfin says the typical U.S. home for sale takes about $111,252 in annual income to afford. Same data set. Buyers around $111,252. Renters around $76,020. So the rate slips under 6. Affordability barely budges. The choke point is inventory, and it's not a mystery. AP reports nearly 69% of U.S. borrowers are sitting on mortgages at or below 5%. Selling means swapping a low payment for a higher one, so people stay put. That keeps the entry lane thin. If you've watched a decent house get 10 offers in a weekend, you already know what thin supply means. It's not a headline. It's a feeling in your stomach. Reuters puts it without the sugar. Economists don't expect a housing boom unless supply improves. Lower rates can wake demand up faster than supply can respond, and the same homes get bid up again. NAHB gives you how sensitive this is in one shot. A 25 basis point drop in the 30-year rate from 6.25% to 6.0% can bring about 1.42 million additional households into the market for a median-priced new home. That is a switch. A tiny move on a chart flips a huge crowd from out to in, and nothing about that adds inventory. If you want one villain, here's the bad news. There isn't one. The San Francisco Fed points to demand indicators like income growth and population growth as major drivers of differences across metros, with house prices generally keeping pace with average income growth. No, let me say that cleaner. Even if supply improves, the places where pay and people keep concentrating can stay expensive because prices can climb with the income ladder. So the national average never matches your life. Your life is a metro, a commute radius, and a ladder. The bill lands on the renter trying to buy, not in theory, in calendar weeks, in lease renewals, in a year you don't move forward. When a required income is around $111,000 and renters sit around $76,000, a lot of households aren't behind. They're gated. Homeowners get their own trap. Resetting a low payment feels like detonating your budget, so they don't move. Inventory stays tight, and the entry door stays narrow. If you want to track this like an operator, keep it brutally simple. Put Freddie Mac's weekly rate next to Redfin's required income number. If the rate drops and the income requirement still looks brutal, the headline is noise. Then check local inventory, because supply is still the choke point. That's the watch signal. I'm embarrassed to ask, but subscribe once.